Recording. And 3, 2, 1, and come on, give me the recording. It's not recording. It's recording. Okay. Welcome, ladies and gentlemen, to the Stock Market Show. Shades Trades here. Let's talk about buying calls. So a lot of people don't know what buying calls means. So this is what buying calls means, okay? I'm going to explain it nice and easy. A call means you're betting that the stock will go up. When you buy a call, you need to pick a strike, expiration date, and that's it, I think, right? I don't think you need anything else at that point. So buying calls, the safest thing to do with buying calls is buying calls with the furthest expiration date. And at the money strike. So let me pull up Schwab here to show you what I mean. Yeah, trading options is easy if you can afford to buy the ones that are all the way, like 2 years out. Too many people, they buy options, but they buy like the really risky Wall Street Bets bullshit. Like they buy like 1,000 calls and then they blow up and post it on Wall Street Bets. Look at me, I'm a degenerate. They're like all proud. You guys know what I'm saying? Okay, so I'm going to pull up my Schwab account here real quick. Let me just move it over. All right, so if you use Schwab, you're going to have an easy time with this. Let me just change some things around here. Okay, so here you go. So we have NVIDIA, right? Buy to open, right? Because you're going to buy to open an options contract. You're going to buy a call. So buy to open, buy one, NVIDIA, and you want to click here where it says the date, and you want to choose the one all the way at the bottom. So 1/21/2028. This means that this contract will expire on January 21st, 2028. So you got plenty of time on your side. What is that, like almost 2 years? You got a lot of time on your side. So that always buy the one all the way at the bottom. Always buy the one all the way at the bottom. And then this right here, the strike price, just leave it wherever it's at. Don't touch that. Just leave it. Don't touch it. The only thing you should be touching is select action, buy to open, and then the date, scroll all the way down, pick the furthest date, and then you go to market and review order and submit your order. That's it. You just bought a call, and you sit on the position and you make $50 or $80 per move, depending. It's at the money, so you're gonna make like $50 per dollar move. So you'll notice that this costs $5,375, right? $5,375. So a call cost $5,375, and it lets you control 100 shares of NVIDIA. If you were to buy 100 shares of NVIDIA outright on the market, it would cost you what? $18,500. So as you can see here, it's cheaper if you have a smaller account under 10K. It's much cheaper to buy an NVIDIA call for $5,000 versus buying 100 shares on the market, $18,500. So the cost that you pay is that you have an expiration date with the call. Calls expire. Shares do not expire. So that's the trade-off. The trade-off is yes, you get to buy, you get to control the 100 shares of Nvidia, but it comes at the cost of, hey, your contract expires. And if it expires, you lose all your money. Whereas buying 100 shares on the market, it's going to be more costly, but the shares don't expire. So you can just hold them, forever if you want. So that's the trade-off. The trade-off is you have an expiration date. And if you're wrong, you blow up. If you're right, you make a lot of money. So it's technically, if you have a bigger account, obviously you're going to always have the safety net of being able to afford 100 shares of Nvidia. But if smaller accounts, you kind of have to, buy the calls because they're cheap enough to be able to control the 100 shares without paying up 18,500, which is like triple the amount. So yeah, that's what a call is. So I'm just gonna review. A call is betting that the stock will go up. You need to pick a strike, expiration date, and that's it. Buy to open, and just scroll all the way down on the expiration date. Pick the furthest one out, 2028 in this case, and just don't touch the strike. Just leave the strike as it is. Don't touch it. Don't mess with it. Just leave it as it is. The most important thing is to buy time. And you get the benefit again of being able to control 100 shares of Nvidia for a third of the cost, essentially. At the cost of you have a contract that can expire and you lose it all. So that there's a give and take, basically. And that's what it is. I just showed it to you. So I'll just buy to open. And then, step one, buy. I got to do like the for dummies version. Step one, buy to open. Step two, what's step two? Furthest, scroll down on expiration date to the bottom and click. Got for dummies. Let me write that down. Options or calls for dummies 101. And then step three, enter order, and boom, that's it. You just bought a call, and you're either going to make a lot of money in the next 2020. By 2028, the stock has to move enough for you to make money, or you blow up. That's it. That's all there is to it. To keep it simple, I could get more technical, but that's like the simple version for dummies. That's it for the video. A lot of people have been asking me buying calls on Nvidia. How do you do it? So here it is. Calls for Dummies 101. Maybe I'll make a 102, but I think this is the simplest version, so you don't end up on Wall Street bets blowing up your account, because those people are idiots. They go in with like 1,000 contracts or something, some bullshit like that. Like they buy like 200 contracts, and they expire, this week. And if it doesn't move in your favor in 1 week, bye money. So always buy the 2+ years of time on calls. Alright guys, that's it for the video. As always, I'll see you in the next one.